Hello, everyone. Thank you for joining us today. My name is Terrence Bazil. I'm a communication specialist, and I'm joined by our esteemed CEO, Craig Leonard. And I want to thank you for joining our presentation. So to begin with today's town hall, we'll be answering some questions that were submitted by you, our members. Thank you for submitting. And just as a little heads up, we've reduced all background noise. You are muted, so you are free to communicate, talk, and have a little bit of dialogue. It won't disrupt the presentation at all. And if you have any questions, please use the Q&A feature. The chat has been disabled and should let me know that it's working. Please let us know where you're joining us from. If you're joining us from the city in Boston, maybe you're out somewhere in Stowe, Vermont, let us know what's going on. And this presentation will be recorded and uploaded to our YouTube page at HUECU on YouTube. And just for joining in today, because we like you so much, we will automatically enter anyone who has joined this presentation into a raffle where you can win some free swag from HUECU. Next up, we also have a brand new branch in the Longwood Medical area, located at 435 Brookline Ave. We would love to see you join us, love to see you come in. We are always running some events going on. Please stop by. And without further ado, Craig Leonard, our President CEO. How you doing, Craig?
Hey, thanks, Terrence. Appreciate it.
First question, HUECU financials.
Yeah, just to give everyone an update on how we're doing, financially. This economic climate is certainly challenging for credit unions that are built the way we are. But just to kind of give you a sense kind of how we're doing from a lending standpoint and from a deposit standpoint. From lending, consumers are still spending. We're certainly seeing that when we see our credit card portfolios and our debit card portfolios. We monitor consumer spend regularly, and it's still higher than that to what we've compared over the last few years. Certainly is still a little bit elevated versus 2022's numbers. So consumers are still out there spending. We're definitely seeing mortgage growth muted this year, and that's no surprise. There is really no refinance activity with interest rates increasing to the levels that they have, certainly where they were just a couple of years ago. There's not that incentive for homeowners to refinance from the low rates that they have. What we are seeing, though, when we started to see this last year, is that homeowners are really tapping into the equity that they've built up into their homes. So we see a lot of people taking out second mortgages, whether it's a fixed rate term or a home equity line of credit. They're using those funds to go on that summer trip, thinking about paying for college tuition, doing that home remodel that they've put on the back burner for years. So we're definitely seeing a lot of activity around home equity lines of credit. And then on the funding side or deposits, with interest rates increasing quite a bit over this past year, we've seen a real increase in the rates that we're offering to our members. Members are able now to really get a much better return on their savings accounts than in years past. For the last decade, it's been a great rate environment for borrowers, but not great for savers. Over the last year, that's turned around. Now savers are finally getting some money back on their deposits that they've had, and so we're certainly seeing that where we see a large shift of our members moving funds out of savings accounts and money market accounts and moving them into higher yielding certificates of deposits. So overall, that's applied some pressure to the credit union's earnings. We expect our earnings to be down a little bit, but largely because we're paying more out to our members in their deposits. So not a bad issue that our earnings are getting squeezed a little bit as a result of giving more money back to our members. So overall, the institution is doing quite well, financially sound, and we expect overall growth this year probably to be in that 5% range. So down a little bit from what we have experienced over the last 4 years, but still very healthy of around 5% growth rate.
Awesome. Thank you, Craig, for sharing. Next question. What other financial areas does HUECU plan to expand to?
Yeah, we've always had that kind of base foundation of offering those products and services that so many other institutions do offer. Some of those home lending products, the savings, the CDs, the checking accounts. But what we've started to do over the last year in particular is started to transform a little bit into other types of products and services. A lot of those have really been the result of hearing back from members. Over the years, we've heard a lot from our members to say, hey, we would really love you to offer investment services as one example. Others have said, you know what, we would like you to offer some insurance products. So earlier this year, we started to roll out insurance. You can now get your homeowners insurance through us, auto insurance, some term life insurance. We're in the final stages of rolling out investment services. We're really hopeful that we can go live with that initiative in September. We had hoped that we were going to go live with that earlier this year, but we continue to recruit for financial advisors. We want to make sure that we get the right advisors in front of our members. You've put your trust in us as an organization, and we want to make sure that we put the right financial advisor in front of you to continue to earn that trust day in and day out. The other thing that we are looking to explore is business banking products. This is something, again, that we've heard a lot from our membership in terms of, I own a small business. Is there something you can help us out? We're starting to do our homework with that, with the hope that in 2024, we can come back to the membership with a really compelling business banking suite of products.
Awesome. Looking forward to hear that, and definitely looking forward to those insurance products. Next question. What financial strategies or incentives are there to help families with home improvements?
Yeah, I mentioned before that, so many homeowners now are staying in their homes longer. A large part of that has to do with the increase in interest rates. And so people aren't selling their homes nearly as much. The purchase market is okay. It's not nearly as robust as it was a year or so ago. So we're definitely seeing people tap into the home equity within their home and do those home improvements. We have a couple of products that I would recommend people take a look at. We have two types of second mortgages. One is a fixed second mortgage, which just has a fixed interest rate with a defined term. So, you can take it out for 5 years, 7 years, 10 years, all the way up to 15 years. And you know what that fixed payment is going to be in every month. The other product that we see more members take advantage of is our home equity line of credit. What we've tried to do with this product to help homeowners is we have an introductory rate, and that introductory rate lasts for the first year. We subsidize that rate, pretty substantially from what current rates are. So as an example, today's prime rate, which most home equity lines of credit are tied to, is about 8.5%. Our introductory rate today is 5.99%. So you can lock into that discounted rate for the next year. Put that equity to work, do those remodeling projects that you're trying to achieve. The other product that I would tell you to take a look at is Mass Save products. So Mass Save has some great incentives out there where they can come in and do a review of your home on how to make it more efficient, whether it's replacing windows, more insulation in your home. And the incentive for that is the interest rates can be as low as 0%. So it's a terrific way to improve the efficiency of your home, increase the value of your home, and really pay really a 0% rate on these products. So between our own products and looking at the Mass Save product, I think those are some strategies that I would recommend.
Thanks for sharing, Craig. I really like the that 0% rate from Mass Save. That sounds like a good one.
We have a lot of members taking advantage of that.
Nice. Next question. Do you offer auto loan discounts for current HUECU mortgage customers?
We don't offer any discounts for autos specific to if you have a mortgage relationship with us. We offer two types of discounts, however, for anyone who wants to take out an auto loan. The first is through auto pay. So we highly encourage our members to sign up for auto pay. And if you do that through one of our checking accounts, we'll reduce the rate by a quarter of a point. Additionally, if you are interested in an electric vehicle or a hybrid vehicle, we'll discount that rate an additional 25 basis points. So if you're going to go green, you can get up towards a 0.5% off on your rate for that. The other thing that's really interesting about our organization, and I think separates us from a lot of other credit unions and banks out there, is that we have so many different product types in which we don't do what's called risk-based lending. So many lenders out there, what the first thing they'll say is, we'll pull your credit and then we'll tell you what your rate is. And that's based upon the different credit tiers you are. So, what they advertise isn't always what you'll get. For us, what we do advertise is what you get. Most of our products do not have any type of risk-based lending. So when we advertise a rate of 6.99% for an auto loan, that's the rate you're going to get in the end. And many of our products are like that. And that's helped so many people who have had maybe less than stellar credit, and that they're not paying an additional amount as a penalty that so many other lenders do charge. So another benefit of using the credit union is not being assessed that risk-based lending charge.
I like that. Rewarding our members with savings for going green. I like that. Okay, next question. How do I decide between a money market, CD, or high yield savings account? Tell me, Craig, how do I make the choice?
I would say, some of this is dependent upon what your own strategy is. What are you looking to achieve? So for example, if you're looking to achieve the highest yield, I want to get the most for my money, then I would say, what you want to look for a CD or a certificate of deposit. The certificate of deposit, you have to realize that you tie up your money for a little bit, so it's not liquid. We pay you a higher rate for the use of your money for a long duration. And we have terms that range anywhere from 3 months to 5 years. So if you want to get a higher rate and give us your funds for 6 months, we pay you a higher rate for doing that. Generally higher than something that's more liquid, such as a money market account or a high yield savings account. So that's the first thing. Are you okay with tying up your money, and do you want to maximize the yield that you're going to receive? If your answer is, I still want to get a really good yield, but I don't want to tie up my money, then you want to start looking more towards a money market or a high yield savings account. Both the money market account and high yield savings accounts are highly liquid. Put your money in today, take it out tomorrow. You're not tying up your money for any duration whatsoever. Between those two products, I would lean towards the high yield savings account based upon what we're paying in the market today. Our high yield savings account yields 4%, which is a really high rate. There are a couple criteria that you have to do in order to receive that here at the credit union. We've put the bar very low. We want everyone to achieve those criteria so they can get that high yield savings. But if you say, what, I don't want to jump through any hoops whatsoever, then I would point you to the money market account. So I would say, there's lots of different ways to approach this. Everyone has different strategies. Some people even like to do what's called a CD laddering strategy, where they might say, you know what, I like the CDs, but I don't want to tie up my money for too long of a duration. Some people will ladder their CDs. They might start with they might put some money in a 3-month and a 6-month and a 9-month. So they're not tying up their money for too long of a period. I would say, come talk to us. Let us help you with your strategy so we can put you into the best situation possible. And I'm happy to help too. So, for anyone who asked this particular question, if you want to email me, I'm happy to sit down and help you strategize on this one as well.
I like that CD laddering. That's a new concept that I haven't heard of before. That's
A
a good
lot of people
idea.
do it. It's a great way to get high yields without playing the interest rate game. A lot of people try to wait and guess where interest rates are going to be. And when you wait too long, you're actually losing money because you're likely having your money sit on the sidelines in a very low rate instrument, waiting for rates to go up, where you would be better off served kind of getting your money back out there.
Mm,
There's a lot of different ways you can approach this one.
thanks. I do see some questions coming in. Please continue to keep them coming through the Q&A, and we will 100% answer them live. Actually, Craig, first question, would you like to answer live? I've heard that some companies are now charging more if you have a very good credit rating, presumably because you can afford it. Do we do that?
A higher interest rate on a loan, is that what you're saying?
Yes.
I have not heard that, and I hope that's not the case. If you have a really good uh, credit rating and people are charging you more, if they are, don't go there. Come back to us, because that sounds crazy to me. You should not be paying more for as a borrower if you have really strong credit.
I would agree. Also, great segue into our financial scoop series, making money with HUECU accounts. If you are looking to learn more, please join our session and view them on our YouTube page. Next up, we also have our Smart Rewards savings account of 4%. Visit huecu.org/smartrewards to learn more. Next question. Why did you decide to partner with Gentrio for estate planning services?
We talked to Gentrio on multiple occasions, and we were really interested in their solution. And we learned a lot when we talked to them. First, Gentrio has been started by a Harvard Business School alumni. And when we were talking to this individual, it was eye-opening to us that only 20% of those who should have an estate plan actually do. So there's this tremendous gap out there. That was eye-opening to me personally. And as we talked about what estate planning is and what it is not, we felt that this was something that we really needed to provide to our membership. The Gentrio solution is extremely interesting in that it removes a lot of obstacles that are out there today. Obstacles such as, I've got to go find an attorney to help me. I've got to find the time to do it. And and it's probably going to cost me thousands of dollars to set this up. And Gentrio eliminates so many of those barriers. They put forward a solution that is compliant. The forms are all compliant, all 50 states. They help you go through the process. They can coach you through the process. They will do an annual review because your life changes. And so your estate plan should change as well. They also provide an interesting way in which you can secure or store your documents, not just your will or your health proxy or your power of attorney, but other things that you may feel important to leave those loved ones behind. And so they have a digital vault in which you can store all this information. So there were so many different positives that we looked at the solution that we said, this is something that we really want to partner with. And we're putting out some more information. And I think actually, and Terrence will probably stealing something on the next slide, but I know we have an upcoming session on this one as well.
Yes, we do. Awesome segue, Craig. If you are interested in learning more about Gentrio and what is going on, please join our session on Wednesday, August 16th at 1 p.m. to learn more about estate planning. We'll have Gentrio and themselves coming up, and they will be more than ready to answer your questions about estate planning. To learn more, visit huecu.org/financial scoop. Next question. Do you think the Fed will continue increasing interest rates? And if so, what does that mean for mortgage rates?
Well, the short answer is I hope they stop. They just increased rates in July by 25 basis points. In June, they paused. And the next time they meet will be September. The economic information that comes out or has come out lately, even this week, has been mixed. But there is a higher percentage of economists who believe that the Fed will likely pause here in September, and it looks like they are likely at the end or near end of their intervention of increasing rates. Good news I think for borrowers from that standpoint. The rates have increased substantially over the last year in particular. And its impact to mortgage rates isn't directly correlated to what they do. So in many cases, when the Fed increases rates, mortgage rates may change slightly, but they don't change certainly to the full effect of what the Fed has done. And in fact, sometimes after the Fed makes a move, it's not unheard to see kind of mortgage rates actually kind of settle down. There is more thought that certainly inflation has been coming down, and we've been seeing that on a regular basis through different economic reports. And a long time with mortgage rates, longer term mortgage rates, they tend to be more tied to kind of long-term inflation expectations. So as inflation starts to come down, we should start to see this mortgage rates start to come down as well. Where you do see more of an impact when the Fed does increase rates are those rates that are tied to short-term indexes like prime. So those in prime index loans are typically credit cards. They're home equity lines of credit. So those members or consumers who have those type of products, they feel the full brunt of when the Fed increases rates. Their rates tend to move lockstep with what the Fed does. So if the Fed were to increase rates again in September by 25 basis points, prime would go up by 25 basis points, which means products such as home equity lines of credit, credit cards, those likely would go up. Other short-term consumer loans like auto loans, personal loans, because they're short in nature, they tend to would go up as well. But mortgage rates, I think we're going to be range bound here for a little bit. We've seen mortgage rates now kind of in the as high as 7.25% on a 30-year fixed, and they've been kind of decreasing to that 6 3/4, 6 7/8 area. We've been kind of range bound for the last few weeks. I kind of see that persisting until we start to really see the Fed start to pause, inflation continue to come down, and then I think you're going to start to see a gradual decrease in long-term mortgage rates.
I'm definitely looking forward to that decrease in long-term mortgage rates on my end. I want to buy a house sooner than later. All right. HUECU's upcoming initiatives.
Well, we're always busy here at the credit union, so there's a few things that that you can continue to look forward to. You know, I had mentioned about business banking initiatives, so we're really starting to tackle that here in the second half of the year, with the thought of coming to market with something probably mid 2024. That's a large undertaking here at the credit union, but again, it's something that our members have been asking for quite some time. A couple of other things that we're working on. One is a conversational phone system. So we have so many of our members calling today into our support center, asking to do transactions such as, you know what, I would love for help to transfer money from this account to that account. This conversational phone system will allow you to do that um, um, through just speaking through the phone once it authenticates you. The benefits of a system like this is that the phone system would be available, you know, 24 hours a day, 7 days a week. You don't have to worry about when our hours of operation are. So you can continue to do banking when you want to do banking. So we think that's a nice enhancement to our membership. And again, we probably will roll this out in early 2024. The other thing that we're working on right now, and I would expect this to come live in probably fall, late fall of this year, is that we're continuing to expand our mortgage geographic reach. For many of you, you might not realize that we can lend throughout all of New England right now. So if you are thinking about that second home in Vermont or Maine, you know, we can help you. But, you know, as we look beyond New England, one state that we're working at right now is Florida. And so we hope to bring Florida into the lineup of states that we can do mortgage lending within the next couple months. So many of us here in New England, we talk about those snowbirds, you know, escape the cold of winter, head down to Florida. So now if that type of situation pertains to you, you can think of our credit union as being an option for your lending needs. So really excited about that one. And the other thing that we're always working on is how we can continue to embrace technology to make banking with us easier and simpler. One thing that we talk a lot about within the organization is how can we continue to remove friction from the process and make banking with us just less stressful. You know, it shouldn't be stressful to do banking. And that's our goal each and every day, is to make it easier. So we're continuing to look at different technologies. One technology that we're in the process of implementing will certainly improve the consumer lending experience for our borrowers. Something today from start to finish that in some cases can take days will soon be diminished to a period that could take just a couple minutes. So we're really embracing newer technologies out there to really make for a much better experience.
Awesome. Those are all some pretty good initiatives. Definitely looking forward to the cheaper or the conversations that'll happen out of these new initiatives. Next up, thank you everyone for joining us today. Thank you, Craig, for being here. And thank you everyone who participated in today's session. To learn more, this has been our summer town hall. I don't see any other questions in the Q&A. So I think, Craig, we are all set to go. Thank you for joining us.
Thanks, everyone.